Hey traders, Raghee here. Happy Wednesday, everybody. Welcome to another episode of Charts and Coffee. Last trading day of March. I'm not expecting any shenanigans or unusual volatility, but I wouldn't be surprised. It's the end of the month. End of anything is always important. It's the end of the quarter, which should be a Lulu, especially considering. Hey, let's kick this off with a quick look at the TNX here. And if you take a look at this TNX, hit a brand new high yesterday in terms of what that 10-year yield is. And so pretty important, not necessarily that this market's in an uptrend, but what are the new thresholds in terms of yields that we continue to see? So yeah, I'm not expecting the market to sort of end the month and quarter with a whimper, but let's be really optimistic about April. Let's be a little cautious, but opportunistic as we wrap up March. And one of the things that we did yesterday was we focused on short-term timeframes. You know, yesterday was a terrific day trading day. In fact, I think I recapped a lot of that in yesterday's free video. So if you haven't checked out the free video for the futures, I walked through the two setups that we did in the RTY. I don't know that I talked about the options day trades that we did in the DIA and in the QQQ. I might have, but I can't recall. But anyways, check that out. We did a little options day trading, a little bit of futures trading, and just played it really short term as we don't know what the next few days could bring. And then we can go into April without really sort of the baggage of March. And I have to say, compared to January and February, March has been pretty good. It has not been as good in some of the grain trades that I've been taking for weeks, if not months at this point now. So I will say grains seem to be taking a little bit of a breather. Crude's taking a little bit of a breather, as would be expected going into the OPEC meeting. And yeah, I'm pretty excited with where we've kind of refocused. And again, I'm going to hopefully sound like a skipping record, and I mean that in the most positive of ways. Steer away for now from tech and from the NASDAQ. We've been saying this for weeks as it's just chopping in the distribution market. Focus on the Dow, transports, industrials. And if you're in Sector Secrets Mastery, I just sent out the watch list that we're going to be diving into starting today, but definitely going into April. So great to have everybody here. And again, if you want to check out the mastery, of course, thanks for the link, slimpertrading.com/sector. Hey there, James. Good morning. When using the monthly anchored VWAP, sure, volume weighted average price, and it's VWAP, right? I hear people saying VWAP. It's VWAP. If a price is trading below, would I target the VWAP? Would I use? Okay. So BLDR, sure. Good. A symbol is always good to take something theoretical and just dive into the application of it. So thanks, James. All right. So when we say monthly, let me backtrack just for a moment on James's question. I anchor 3 VWAPs, one to the beginning of the year, one to the beginning of the month, and then one rolling 10 days. So that gets updated nearly every day. And so 1st of January, 1st of March for another few days, and then this rolling 10 days. So the monthly is not a monthly chart. I don't believe in any way that traders are going to get benefit from deluding themselves into thinking that they can manage the risk on a monthly. And weeklies are borderline there too. So be very careful convincing yourself that there's a trade to be had where you can manage the risk and the volatility when looking at a weekly or a monthly. I think it's a very tricky thing to do. Needless, so when I talk about monthly, what I mean is the first of every month on a daily time frame. So BLDR is above both currently the 10-day and the month. But here's the thing, James, I don't have a trend here. I don't mind BLDR. We've been in BLDR before in the mastery, and I think we focused on it back when it had the double green late January. But for now, I've been kind of steering clear. And quite frankly, if there's any VWAP that I'm watching right now, it's going to be the one anchored to the first of the year, with this nice thick volume ledge sitting right there. So yeah, don't put too much credence in the first of the month and rolling 10-day at the moment, although it's nice that they're sitting on top of them. So that might be a nice tight stop if you want to use something like that. But be careful. I don't know that that's a level that I would just sort of hang my hat on. So thanks for the question, James. All right. And let's see here. Stocks, options, and more. Good morning. Starbucks, even though it has yellow waves, has still managed a good trend. It's on my watch list for a pullback. My thoughts. Sure. So let's take a look at. We like Starbucks. Starbucks was a trade we took back in March and also February. I love the XLY, generally speaking, especially with all those stimulus checks going out. It's hard not to like some of the stocks in the XLY. The XLY itself looks ugly sort of at face value because of Amazon and Tesla. So do I like Starbucks? You're right. It's sort of chopping higher. So I don't mind to be long, but what I would say is I'm going to lean. So when I don't have a trend, and you make a great point, when I don't have a trend in place, what I'll do is I'll have to lean even more on the VWAPs. I'll have to lean even more on the volume ledges. I'll have to lean even more on perhaps Darvis and different chart patterns. So right now, personally, of all the things that I could be in the XLY, what I'll tell you is I'll put my money, or I'll put my mouth where my money's been, and that's been GM and Ford. So what I would say right now, and actually, if I recall, that might be the last two issues of the Countdown Trader. So you bring up a really good point there, stocks, options, and more. How do we look at markets that might be choppy, but go a little bit further down the waiting list in those sector ETFs and find relative outperformers? And Ford and GM have been that for us. So I basically like XLY, but I'm going to be a whole lot discerning about what it is within it. And I want as clean a trend, green MACD as possible. So Starbucks, not so much. Frankly, I don't have any skin in the game there. So I'm not going to tell you, yeah, jump in. But I do have skin in the game in GM, and I do have skin in the game in Ford. All right. And again, same idea, that overall XLY conversation. Thank you so much for the question. Good morning. Good morning, everybody. Thanks for all the good mornings. Great to see you all here. All right. So next up is, hey there, Paul. I'm looking at TWLO, good old Twilio, sure. Folks have asked, Rog, you've been so adamant about avoiding a lot of tech. When are you going to start to look a little bit more at it? Look, gang, I am always scanning SKYY, CLOU, SMH, and XLC. I'm leaving XLK sort of alone, but I am scanning tech for those individual stock relative outperformers, because it's going to be those individual stocks that will probably be sort of the foreshadowing eventually of some more organization more broadly within the sector and the ETF. So, and the index. So I'm really looking individual stocks. So I like where your head's at, Paul, individual stocks. So TWLO, though, I got to be straight up with you. I don't love it. I do like that there's a good V-score support here at a -2 standard deviation. And I do like that the -2 standard deviation that already proved to be support in March already, we're there now as we're testing the 200 exponential. So I've got a volume derived, so it's two different indicators. I think a lot of folks have a lot of price-based indicators on their charts, which are terrific. My wave is price-based, Darvis is price-based, propulsion dots are price-based. But also ask yourself, we always want to analyze the market according to 4 factors. Price, of course, being one of them, volume, volatility, and time. So time-wise, we have some proximity to earnings, but not enough where I'm inside my 2-week window. Remember, I use a 642 countdown. They don't call me the countdown trader for nothing. 642 countdown. Nobody calls me the countdown trader, but there's a countdown element to what I do. So really, if I have the potential for a run into earnings, it's going to be in a double green. This ain't it. And we have a red MACD. Right? So I have a 200 exponential and I have a -2 standard deviation VWAP. Keep a tight stop. To me, either this holds this volume ledge around 300 or we could tumble a little further. But be very cautious here. At least, so this is where I don't believe we're bending the rules here, Paul. This is where I don't believe we're bending the rules. And that is because, give me one moment here. And I apologize. Sometimes the questions I know block a little bit of the chart. There we go. So what I know here is that I have a yellow underlying market trend, which means I still have the opportunity to buy an oversold level. So what I'm trying to say is that's likely our oversold level. Thank you for the question. Let's see here. Srini, good morning. Mastery's a real, oh gosh, thanks Srini. I appreciate that. Learned more in the last 4 months than the previous 4 years. Well, thank you. I credit to you guys because you've been getting, holy cow, gang, you guys get on a regular basis a 3-decade brain dump, right? I mean, what have I been doing? Good, bad, and ugly. What works? What doesn't work? What are the lessons that I've learned? Where are the bruises, paper cuts, and all the good stuff too? Yeah, you guys get a 30-year brain dump across multiple markets on a regular basis. So credit to you for just soaking all that up. For sure. Thank you for the question. Ian, how are you? You like the volume profile? Cool. My volume profile faces the other way. How do you switch it? Ian, I don't know. I don't know what platform you're on. If you're on TradingView, you can simply search volume profile within I'm on TradingView right now. I've been using this more and more and more, mainly because I'm pretty proficient in Pine Editor. So if you go into the search criteria, the indicator search, which is that right there, and search volume profile, there's a number of them. And most of the ones that I use, including the ones that I've coded, come out from the right. That's the way I like it. I like to see it along price too. I'm with you there. Next question. Hey there, Patrick. I see I'm in the options room at the close. Oh, yes. Mandy did reach out to me, and I will be in the simpler options room and the simpler futures room, dual broadcasting. So you guys will get futures, ETFs, options, everything. We'll be doing open mic for the close. We'll cover it all. What am I looking for with the last day of the month, first day of the month tomorrow? So, Patrick, what I'm looking for is building my watch list. Like I said, I know a few parts of my book right now, and I don't mind showing you guys good, bad, and ugly. You saw 2 monster trades in Ford and GM. Both of those were 2x wins. But let me show you, when it stings, what happens. This is a 25% value of premium. I'm going to end up pulling the plug on this trade. So what we typically focus on, not that I can set a risk reward well ahead of time, and I don't hang my hat on that, but our typical upside is, depending on what we paid for the option, I'm looking for 2 to 3x. Now, look, I'm buying options that are typically less than $7, 5 to, sometimes we've bought options for, gosh, gang, some of you in the mastery know we picked up options for $1.70, $1.40. So it's nothing to see those go 2x. There's much more potential upside in those setups, that compressed energy, taking advantage of pullbacks, and then just any kind of slight regain of momentum, and we start to look really nicely in the money on those options we play. But when I'm wrong, we want to keep our risk about 15 to 25% of premium paid. And so in that way, we're consistently putting ourselves in a position to take paper cuts when necessary. Look, Ford and GM, huge 2, if not 2+. I'm trying to remember. I think it's about 2x returns, but this will be a negative 15 to 25% hit. So, we want to make sure when we're wrong, let's talk about it, because people in my position don't talk about it enough. When you're wrong, is it a paper cut? Because that's what it should be. It shouldn't be an 8 count. You shouldn't have to take a knee. It shouldn't be so debilitating that it risks your trading again, right? That's risk of ruin. And that's 50% of your account, gang. So, we'll talk more about what I'm building for next month, Patrick, because I'm still going to be in the similar type of watch list that I built in March, which is steering away from the broader indices, save the Dow, because the Dow is going to continue to benefit from the current macroeconomic environment that we are in 100%. My portfolio longer term is pointed that way. My trading book is pointed that way. And we're going to just do more of it in April. Just say that, look, it's okay to not trade stocks that are heavily weighted within the NASDAQ and within the S&P. The NASDAQ's acting like the NASDAQ right now. Steer away from it. It's okay to not trade tech stocks. It's okay, I promise you. And so, we're going to focus on other sectors. And Jack, great question. When I ask your thoughts on XLK, SMH, and XLY. So XLK, SMH, and XLY. Let's start with XLK. XLK is, of course, what? It's Apple. It's Microsoft. Do I like Microsoft and Apple? Because one of the things that a lot of traders find surprising when they start cracking open an ETF is that they realize the disproportionate weighting a small number of stocks have. In fact, if you didn't realize that last year with the way in which the indices were behaving, gang, 6 stocks moved the market. Why? This isn't hyperbole, and I'm not being dramatic. I'm not being a drama queen, although Raghee does mean queen of queens. What I'm saying is that when you look at the weighting of the indices, Dow, NAS, Russell, S&P, Russell not so much because it's more of an evenly distributed group of names, but for sure, Dow, S&P, NAS, there's a disproportionate weighting of tech. There's a disproportionate weighting of a very small number of stocks. I think a lot of folks forget or simply don't know that Apple is more heavily weighted than other names, or Microsoft is more heavily weighted than other names within the XLK. So where those names go, it's going to pretty much dictate XLK. So if I don't like Apple and Microsoft, I don't like XLK, my friend. But it doesn't mean there may not be other names further down the weighting list that do look good. And that's where I would focus now. See, a lot of folks are still looking at these heavily weighted names. My advice and what I did through March that worked is just don't. What you want to do, focus on reflationary names. I know we've talked about that plenty here in Charts and Coffee. And then think about names that might be lower weighted, the way that we sought out GM and Ford within XLY. So let's go on to your next question about XLY. Again, choppy. What's the culprit here? Amazon and Tesla. So if Amazon and Tesla are in bad moods, it's really difficult for the XLY to get out of its own way because, again, disproportionately, these stocks are heavily weighted. But if you go down the list, take a look at the weightings, go down the list. Again, I think this particular update, separate yourself from the pack over at countdowntrader.com. You'll see, I think, one of the episodes or one of the issues that we talk about this list. And that one might be coming out this week, now that I think about it. That might be coming out this week. So keep an eye on that one. I think, actually, Trish was showing me the issue, and I think we have one of the breakdowns. Actually, I think it's an XLY, so do check that out. But go a little further down the list and look for names that are further separated from being as directly influenced on XLY. So that's going to be the tactic. Same thing with SMH. Do I like semiconductors? Gosh, the only thing you hear about semis right now is the global shortage, right? So there is a narrative there. But remember, beware of narratives that don't yet have traction in price. So in this case, once again, crack open semis, go down the list, preferably lower weighted, and find out where certain names are emerging as potential double green. So I hope that helps, gives you some tactics to follow there. All right, next question is, as far as some of the questions about Chinese stocks, gang, a lot of that's going to be some of the fallout from the, Archegos. I don't know what the heck was going on with some fund manager playing YOLO and crazy leverage. But again, if anyone calls hedge fund guys generically, right, there's some brilliant hedge fund folks, but I never call it smart money. And there's evidence why. It's just big money, right? Big ain't necessarily smart, as we can see right now. So I think a lot of the names you're seeing in the Chinese stocks, Baidu, I think they had exposure to, names like that. That's probably, I haven't been following that narrative that much because it hasn't been affecting my book of trades, but I'd say that's probably some of that Archegos fallout. The YOLO hedge fund guy. Unbelievable. So do I expect more volatility today? Not necessarily, but I'm going to keep my guard up for sure as we wrap up any month, but certainly any end of month, end of quarter event. All right. Here's a cool question. Hey there, Fernando. Do I set limit orders to get out of positions that go against you? Can I talk about that? Fernando, what I do is I set alerts. So one of the things we do in the Sector Secrets Mastery is I set alerts at the price level. So when I send out an alert, I send out triggers, aggro, moderate, and conservative triggers. So when price reaches those levels, it's buzzing on my desktop, it's buzzing on my phone, it's buzzing on everything. And I know that price is in the range from which I want to be a bidder of that option that I've set up in the alert. But how do you manage a position once it's open, especially if it's an option? You place an alert, and you can do this on Thinkorswim. This is one of the great things you can do on Thinkorswim. And if there, I'm sure there's other platforms that can do this, but that's usually what I'm using for my option swing trading. Is you can place an alert on the value of the option. So that's something that I do quite a bit. I'll place an alert on the value of the option. So when it gets close to a level that's either break even or whatever I've set, I'll place alerts. I place alerts. Can you place conditional orders? You sure can, but I won't place a limit order. My conditions are price-based or what I paid for the options based. So the simple answer is no, but that's what I do. So I hope that helps. I hope that helps. And just like that, gang, we are out of time. Thank you always for being a part of our Charts and Coffee crew. I've got a little bit of a pumpkin death wish, which interestingly tastes like a cross between Indian chai and coffee. It's actually pretty darn good. All these spices, pretty nice. So that's what we're rocking this morning here on Charts and Coffee. Thanks as always for being a part of it. Before you head out, smash that like button, leave a comment. I do check the questions. So leave a comment. Me and my partner here in the office, we do check them. So, and then if you have a request for a future episode, let us know. All right, gang. Thanks as always. We'll be back same time, same station tomorrow. Be good to each other, gang.